Thank you for joining me. I'm Juan, lead trader and founder of Prosperity Trade. In this video, I want to break down tapering and help us understand what tapering is and how should we prepare for tapering. You're going to want to watch this video. So before we define tapering, let's go back a little bit. So this article came out August 26, and they talk about the Federal Reserve's quickly responded to significant financial market disruption on the onset of COVID-19 pandemic in March 2020. So this is the start of it. This is what brought us here to today, talking about tapering. So what the government basically did is they purchased assets, U.S. Treasuries, and agency mortgage-backed securities. And this policy of buying assets to add to the balance sheet is called quantitative easing. So if we look at this sheet here, it shows how much they've purchased, how much they have on their balance sheet. If we look here, decline 2020, this is COVID pandemic. So they started buying what we mentioned in the other slide, US Treasuries and agency-backed mortgages every month, pumping billions of dollars into this. And you see how much money they've spent. 7 billion, then it pulled back a little bit. It's been on a steady uptrend. So at this point, people are saying, okay, the economy is better, unemployment's better, we're not in a crisis, we're post-pandemic. When is the buying of these assets going to ease up? That's basically what the tapering is. It's basically slowing down the purchases of these US securities and agency mortgage-backed securities. So the question comes, how are they going to do this? If they start to taper, which I'm sure they will, how are they going to start to taper? So if we look at this chart here, this represents their purchases. So the bottom represents the mortgage-backed securities, and the middle line, the orange or the reddish line, represents the US Treasury, and this is the total. So one strategy that they possibly mention that can be a type of strategy for tapering is they go a little bit more aggressive with the mortgage-backed security because we're not in a housing crisis like before. So how that would look, instead of a sharp uptrend like it is now, it'll probably slow down a little bit, and then maybe plateau. Okay, as opposed to with the assets, the Treasury securities, they may want to keep the uptrend a little bit sharper up and then kind of ease up a little bit and sharp up and then maybe kind of plateau eventually a little bit. And what that would do to the total, let's see, we have this big sharp climb. Maybe it'll just kind of like ease it out a little bit and it'll be less of a spike up. So those are some possible tactics that they may take when they start tapering. So the strategy about plateauing the purchases, they're trying not to shrink the market or shrink growth. But they state that even with the tapering, when the tapering begins, they will keep the monetary policy, and this will be supported. This will help support the economy. The monetary policy is basically, it helps against inflation, interest rates, and the money supply. And what exactly does quantitative easing, why does this strategy, or what's the theory behind it? How is it going to work? So the feds, they buy the asset, they print this money, they buy asset, which they've done the largest amount ever of money being printed has been within the last few years, within the COVID. And now this new money enters the economy. So more financial institutes have more cash. There's liquidity in the financial system, which allows financial systems to give loans, decrease the criteria of borrowing money, and ensure financial markets are operating normally. Interest rates decline further, which helps out the stocks because of the valuations, and it becomes cheaper to borrow money. Investors change their asset allocations, and the confidence, it grows in the economy. So it starts signaling, and this is great for the stock market. Everything becomes a bullish, and it's great to stimulate the economy. So this is the theory behind quantitative easing. So the fear is, how do they stop quantitative easing? What is the strategy? So there's fear when it happens too early. So with tapering, if they taper too early, then this can spook the market, right? So they have in 2008, the financial crisis, then Chairman Bernanke, he spooked the market when it kind of slipped in a hearing that they were going to start tapering, and this had the bond yields moving crazy. And it wasn't expected, and it led to what they call a tapered tantrum. So this is what they want to avoid. I think this is why it's being spoken about more. There's more awareness. They want to avoid a taper tantrum. But what happens if the opposite? If they don't do it, or if it happens too late, then this basically inflates the assets, and it can cause a bubble. So that's another concern. If they don't do it, or they take too long to do it, this continuing to buy these assets in this market when everything is just getting expensive. So this can cause, or can ignite a possible bubble. To recap, tapering is basically slowing this down, hopefully eventually getting it to a plateau, slowing it down, not to do it too late, not to do it too early. So if we look here, how tapering is defined, tapering refers to the Fed systematically decreasing the amount of assets it is purchasing each month. And it's basically what we discussed. We show those assets what they were. They're just going to slow down the amount that they purchase each month. So that's what kind of causes the fear. People just don't want to see another, what they call taper tantrum. And like in 2008, when it slipped out, came out too early, it resulted in the taper tantrum, but it wasn't as bad as people are making it seem. It wasn't like a crash. The market didn't crash. They're saying the market basically pulled back because it wasn't even more than 6%. Another thing that may cause some fear upcoming, if they start tapering or after they start tapering, they've talked about unwinding the balance sheet. And what that means, in the same way the Fed's created money when it bought securities, the process of destroying this process destroys the money. So this is another thing that may cause some fear, and it's just, they call it basically a stimulus in reverse. The money supply shrinks. They stop making so much money. This is another thing that may cause some fear. Tapering, it is going to cause some volatility in the market, but this article here on CNBC represents that states that why the tapering should be good for the economy. And they mention how the Fed's tapered tantrum in 2013 was followed by strong gains for equities, and the market pullback in September of this year matched that level of decline. So they're calling it a pullback. They're not calling it a crash. It didn't crash the system. It's just a pullback because it didn't even drop more than 6%. They say based on the 60-year. So if you read this article, they mentioned that the Fed's taper tantrum of 2013 was followed by strong gains for equities, and the market pullback in September of this year matched that level of decline. Like I said, so they don't even call it a crash. They call it a pullback because it wasn't even more than 5 to 6%. So we had that tapering back then. It was kind of early, caused some fear, but there was the pullback, and then everything just gained, and we went back to a strong bullish market. So if you want to prepare for tapering, what are some strategies that are discussed by analysts? So right now, the first positive sign, I feel that the tapering or the groundwork that's being laid for tapering today isn't like in 2013. I feel like there's groundwork being laid, there's discussion, it's slowly easing, there's hints. They're kind of laying the groundwork to avoid another taper tantrum. So how do we prepare for stocks? So there's some strategies. First, some analysts just say, just don't overreact and ride the wave. Like if we look at the past, it dropped 6%, but then rose, and it's been bullish ever since. As far as the strategy for bonds, we're not going to discuss strategies for bonds, but they just state that longer term bonds, maybe 10 years or more, you might find some more volatility on those types of bonds. So they may recommend like shorter type bonds. But that's a different topic. We want to focus on stock. So a couple of points with stocks. So something we should remember with tapering is the prospect of higher interest rates. This can dig into stock evaluations. So that's one thing to remember. The stock evaluations may be affected with tapering. They do recommend that do not overreact. Don't just sell everything out of fear. Have some sort of plan if tapering begins. So with this in mind, that tapering coincides with strengthening of the economy, some advise diversifying your portfolio with maybe some small cap stocks, with maybe some international stocks, with possibly some cyclical stocks like industrial and basic material, or some finance sector. All these things may be bullish during a tapering. Although we mentioned those types of stocks, they do come with risks. Small cap stocks may be volatile, or they may have less volatility and it may be illiquid. It may be harder to jump in and out of a position. International stocks, you have to worry about economic and financial crisis. You have to worry about currency fluctuations. So I guess the main thing is not to overreact, not to fear. We've gone through tapering once before, and I think it was worse before, and there was barely a pullback, not even more than 6%. So if you want to diversify, maybe look into some of those sectors that we mentioned, some of the cyclical stocks, some of the finance stocks. This may be bullish during the tapering. That was just a brief definition of tapering and a basic understanding of what happens during tapering. I hope you enjoyed the video. Thank you for watching. Please don't forget to subscribe, comment, and like. See you on the next video.